right? Okay, so everything is on the chat. The question is, these things are on the chat. What are you telling you? What do you get from it? So what's the message you're passing across? Like I tell my guys, I tell my friends that the market does not do anything without giving you a hint on what it wants to do. So it's either the trader is not seeing that hint or the trader has a fixed mindset, right? Number one, if you have a fixed mindset, you're going to make money on trading. I'm not going to say you're not going to make money, but you're going to run into quite a number of losses. Okay. So because the market is dynamic and the market is the oldest thing alive, older than any trader alive right now. So the algorithm knows how to play around people, trick people's mindset and all of that. And that takes me down to the issue of lower time frame charts. So again, lower time frame charts, lower time frame charts. Sorry, I got a message. Lower time frame charts can be very confusing. If you're a scalper, right, and you do lower time frame chart, it's good. It would work. You just like any, as long as you manage your risk, you would also be very, very profitable. But at the same time, you want to be able to have a logical approach to how you interact with the market. And that's why a lot of the things I trade has to do more with reasoning. You're asking yourself questions, and then the market is the answer. If the market does not give you an answer at the time, wait till you get the answer. Okay. So we're going to be looking at today's market as a case study of how the strategy actually works. All right. So let me change this to Saxo. Okay. So this is Saxo, and this is today's price action. So let's just go to this price action. And I'm going to be 100% honest with you guys. And I want you to follow through. Because there were quite a number of things I mentioned yesterday. I know. A lot of things. And all of those things, you can actually get them on YouTube, either on my channel or so on and so forth. But I have quite a number of things on liquidity. If you're patient enough to watch the videos, you would definitely read the fruits, right? You read the good fruit. Okay, so about today, following the SOP, right? Sorry guys, let me bring the SOP. The one on the video I sent. Now that video was a FX replay back testing session with a friend of mine. And he it was a blind price action. He opened the chart, he chose everything we had to do that day. And the only aim for me was to just put him through on how things can change. Okay. So so for today, the first thing, like every other day, the first thing you want to do is to come to the weekly chart. So let's say for example, I come to the weekly chart. So the weekly, what do I see? Right? So it says go to the weekly chart, mark the liquidity and the closest SNR/EG to current market price. So this is current market price. The closest liquidity and EG to current market price. This level, this liquidity, right? This is the previous week low. This is the previous week's high. Okay. Those are the closest liquidity levels to this level. All right. I'm asked to mark SNR level, so I'm going to mark this classic SNR. Right. As much as possible, try to make your charts very, very neat. Because if you have a lot of things on your charts, you can also get confused about what is going on. So you want to make your chart super clean. The cleaner the charts, the better your eyes for you. Okay? The cleaner the charts, the better your eyes. So what else do I see is I have to mark as many as not possible for you. I'll mark this level also, mark it properly. So, and I prefer to use short lines like this because if I use this long horizontal lines, I would have too many of them. I don't use this long horizontal line until I'm like on MH1 or M15. Because if you have too many of them from the higher time frame, you would also get confused about what's going on. Okay, so EG wise, this is still EG. Okay, that is still EG. So as you can see, I've marked the liquidity closest to current market price, right? This is this week, I think. Yeah, I've marked the SNL level closest to current market price and EG closest to current market price. So when I drop down to the daily chart, what will I do? The first thing I have to do is to refine the weekly levels I've drawn. Okay, so I want to refine those weekly levels. So these lines, they are too long on the daily, so I want to make them short, a little bit short. So like this. Why? Because I need my chart to be clean. Okay, so this is this. Like, make it shorter. Like I said, a clean chart is a clear mind, clear eyes. Okay, so I can leave this way. What else do I have? Okay, for me, there's also this daily EG. Like I said, there's an hidden engulfing over here. Super word candle, right? Like I used to say, that's a super word candle. And also there's an engulfing over here. So I'll mark this engulfing. This one. Okay. What else do I have on the daily? Okay. This one is supposed to start from here. Okay, so what else do I have in the daily? We have this high, previous daily high. That's liquidity. We also have previous daily low. That's also liquidity. Okay, so what else? Closest to current market price. I think that's all. I think we've done well. Closest to current market price. Okay, so H4. So again, on the H4, what will be the first thing I'm going to do? So the first thing I'm going to do on what's going on? Why is this thing coming back, coming back, coming back, coming back? I don't have to keep changing. That's it, coming. Okay. On the H4, where are the closest technical levels to what I have on the day? So number one, I have to refine what I have on the day. So you can see, this is a very strong engulfing. So I'm going to mark it. Like welcome to today's okay, so I'm going to mark this engulfing, very really strong engulfing. Another thing I'm going to mark is this breakouts on the H4. Okay, so H4 breakouts, and again, pretty much the liquidities have been marked. Okay, this level can also be liquidity because this is typically the last structural low before this area. And also at this point, there's also an engulfing. So market. Okay. Typically, I don't do all of this actually. Just come most times I can pretty much see what's on the chat already. All right, so on H1, all I do, the first thing again to do on H1, as you can see, is first refine the H4 level. So, and by refining, you're not deleting the H4 level. You just draw the new stuff you can see. So here, you can see this reaction is here. You have this classical scenario here. So that's on top of refinement. This is my H4 level. I would not delete it. Okay. I'll leave it over there. And structurally, as you can see, there is pretty much no action actually. Pretty much no action. What you can see is just an engulfing cell over here, closest to current market price. But this engulfing cell does not tell us anything because H4 at this time is not asking us to sell. There's nothing on the H4 at this time that's saying, oh, let's sell, let's sell. And let's see M15. There's also nothing on M15. There is no, what's it called? There is no, there's no structural leg. The last structural leg on M15 is this low. Okay, this one, right? Because this is what we have here. From here, we have this, and this. So at this time, is looking as though this is just a retracement downside, right? Okay, so what else can I see? Okay, another thing you can see is a type of breakout structure. The first type, when price came to this level, on M15. See, there was a reaction here. Price gave a reaction here, and then we sold off. So at the same time, price came, broke it off to the high side. After breaking it off to the high side, guess where price is going to use to sell, right? This initial move. So this notch price comes, taps that level, and well, at the time this happened, for me, pretty much there's still no trade because I'd rather wait for things to be super clear because I'm risking my money. If I'm going to risk my money, put my money on something. Even though I want to accept the risk I'm taking, I also want to know that there's a logical reason why I'm putting my money on the table. And that's the difference between myself and a sports bettor, a sports gambler. Okay? Because I play sport betting. So sport betting, then is not in your hands. I mean, Man City has been losing almost every weekend now. Barca also, I mean, spoiling people's tickets, all and on that. So the difference between myself when I trade and myself when I play bet is that with betting, it's not in my hand. It's not in my hands. The only thing I agree to lose is the money I had put in, place the bet. But in trading, the your reasoning, right? You have to your the money you lose is right in front of your hand. You decide to lose and you decide to win. And that's why a lot of people can go far and near to learn the strategy that can make them very, very profitable in the market. Right. So at this point, for me, I don't know anything that's going on in the market. In fact, I'm not even going to sugarcoat things for you guys. So at this point, I don't know anything that's going on. So what will I do? I'll just wait. So when things are not clear, when the coast is not clear, you wait. You can never be wrong as a trader when you don't act, when people expect you to act. You can't be wrong. There is nothing that can make you wrong. Nothing in this world. Okay, so at this point, since there is no clarity, there's nothing telling us to buy, there's nothing telling us to sell. Well, there's something telling us to buy from here, but well, it's just M15 and H1, but there's no logic really because this is not liquidity graph over here. This is just a single leg down. And but the trap is if you go down to the lower time frame, you'll be trapped because you might start to think, oh, this is BP, first buy, first break, second break. But that's the only reason you have to sell. So why do you want to risk your money on something that is not outcome? So rather than taking that sell or waiting for that to happen, you just be patient. Okay. So let's see, let's play. Okay, so now we've seen a reaction, and then let's see. Obviously, everybody knows what happened today, but just to show, it's just for show, some show. All right. So this was the H1 tap, H1 level got tapped at this point. As you can remember, it was the H1, and then the H4 level eventually got tapped. So that tells us something that the H4, no matter how long, price would almost always still come back. And at the same time, it's the H4 breakout level. You can see, I'm just seeing this also. There is a gap level at this zone that price is reacting to. So it means that if there's something I want to consider the most when price was here, it would be to buy this market. But I might not be sure, I might not know for sure. So someone like me, I might just need more confidence. So what else do I need? Now on M15, I've seen that price has reacted from a level, very good level. And also this is gap level. In fact, it's equilibrium because this is the same gap level on the H4, same on M15. Okay, so you're asking yourself a question. You want to place your money on this. Why? What else can you see? You can see price at this point, price takes the high and then price takes the low. So this is true break of structure over here. This is price behavior into this area. Okay, so after your true break of structure, price is reacting from H4 level. Pretty much there's equilibrium, there's rejection, there's true break of structure, price behavior. And in fact, there is an MSG. So price takes the high over here again and then comes to induce this level. Okay, and this engulfing becomes a vital structure. So the question is, where is this engulfing coming from? Obviously, all of this is from Einstein, right? So let's see, where's that engulfing coming from? That engulfing is coming from this bigger H1 rejection. Okay? So this is a big H1 rejection. And how do we refine? We go lower and we mark the engulfing that is in the box. So this is our refinement, this MTF. Okay, so we have price takes the high at this point, comes to take the low. The best place to engage this trade would be at this level. First time, yeah, you could have engaged at this point, and then your stop would be just below this. Okay, so that's the first thing then. And your target obviously will be this high. You don't want to target more than this high. The next high is you want your target to be something you know price would achieve, right? Because your aim is to make money in the long run. You want to make money. That's why you're doing this. You want to make yourself proud. You want to be able to provide for yourself, have freedom, have time, those things. All right. So this is price behavior and also giving us an MSU, even though the MSU has not fully formed. All right. What else can I see on M15? On the M15, you can see this hidden engulfing over here. Okay. Just like I say, all this hidden engulfing, they are usually cheeky. There's a beard guy just hanging around somewhere nobody can see. So I want to check each one. Oh, okay, there's a classic scenario within that area. So the question is, why will I not be scared of this? I won't be scared of anything here because it is just a single leg down. This is one leg down. Okay. Structurally, we are bullish. Structurally. Okay. Plus, we have reasons to believe that this is an H4 level. There's equilibrium, H4 equilibrium. There's more reason to pick a buy than to pick a sell, right? So at the same time, let's see. So first entry would have been somewhere here, off of this engulfing we find from the H1, right? So let's see. Okay, so eventually you get a true break of structure at this point, and this was just about the time I woke up actually. Well, I didn't take the buy. I was not in the buy. I just saw it play out. Right? So you already have price take the low over here. Sorry, take the high, sorry, over here, take the low, and then true break of structure. And the same thing repeats itself, right? Price takes the high, takes the low, true break of structure. Now, again, to decide where to pick the trade on the retracement, again, you have to, first of all, go to the high time frame, see if there's anything close by. So, for example, the closest thing, I might mark this breakout level up on that point. So that breakout on H1, as you can see, what we're doing here, we break out on H1 somewhere here. So again, I'll check H4. Is there anything on the H4? But I don't think so. So back to M15, back to candlestick chart. So what else on M15? On M15, I can see this is a high, this is a low. In fact, this is an EFG, right? These two can do. This is an EFG. So yeah. So I'm going to mark my zone from this. I'm going to mark my zone from this level, this H1 breakout to this M15 EFG. This is the H1 breakout level. Let me delete this guy. Okay. Right. So if price stops, obviously this will be a very good entry. Right. I'm not sure. I think somebody took this entry in the group. I'm not sure. Or something related to it. So price came into this level, right? Into our hidden engulfing. Precisely, right? That and then start to sell. Now, in the face of, as it was selling down, in the face of many people, it would be a reaction to this classic scenario. And it looked good at the time. It looked very, very good at the time. But you must always remember that the reason why you should take this sell is just so little. You should not be betting your money on it. It is just a single leg down. If we had something like this, maybe we had something like this, and the class question was somewhere around there, then you might start to consider, oh, what's going on? I'm not sure what's going on and all those things. But in a trade like this, where you have overwhelming evidence to buy this trade, overwhelming evidence, H4 breakout, H4 gap level, with M15 equilibrium, and the H1, even H1 is H1, sorry. So it is H1, H4, M15 equilibrium for this gap level. See how strong that is. Plus, you did not even enter directly here because this was probably 1:30, and that was 1:30 in my own country. So midnight. So you got price take the high, price takes the low, gave a true break of structure. What else do we need? And this was not even on M1. This was right in front of our eyes on M15. Okay. Again, repeat itself. Take the high, take the low, true break, retrace into that beautiful EFG on M15. That's your buy. Okay. And this will be your target. So after you've taken your target, probably depending on your system, if you decide to take partials or you decide to let it run, it's always good to pay yourself as soon as you can. All right. So for me, at this point, I started watching, right? I was not in any trade. I was just watching what was going to happen. I was wondering that is there anything within this level where price can sell from? Honestly, I don't think anything happened apart from the fact that we had this broken HNS from this level, right? But this is the only level at the time. So I was just watching, just seeing what will happen. And let's see. So eventually we tapped that level, that H4 level I just marked right now, which was like the only level that was available at the time, right? So back to M15. So in M15, when this engulfing formed, this is not a sell engulfing. So that was one reason why I did not take the sell from it. I didn't pick this sell because this was not a sell engulfing. In my experience, I've seen several times where this will form and then price will just keep going high, right? Because this is not a sell engulfing. This guy did not engulf this guy. They did not engulf each other. So I just kept on watching. Okay. So now this is the first descent engulfing. Let's use my word, first descent engulfing. And what do we have here? Just the same thing over and over again. So you see price at this point. So we had the retracement here. So suppose steadily price has taken the high, price has taken the low. So now if we want to continue higher, it has to give a true breakout structure, right? If we want to continue higher. So that has to happen. So yeah, I was expecting that to happen. And at the same time, I was also looking out for other things. It's a question of the following question. So question number one from here, say what is the current direction? Read your story of price using higher time frame direction. So what's happening in higher time frame? So the only thing I can see at this time is, oh, there's a sell engulfing. But like I said, a sell engulfing on this time frame does not mean anything. Okay. And another tip that we often miss in trading is forgetting to mark recently formed level. So right here, there's an hidden engulfing here. Right? This is an hidden engulfing that just formed. This one. So I'm going to mark it. Okay. There's an hidden engulfing that just formed. So you should pay attention to it. And that's why when somebody, I think he was using M5 sharp. I think he was using M5. Let me see. Yeah, I was using M5. And then I was trying to tell him that, oh, this is the last low before this window because this is also an MSU, right? So if we are expecting any sell at all, to probably be to this downside. Okay? And after this break, one of the very important things, I have a tool that draws MSU for me, right? So after this break, there was I was indicated that there's already an MSU. Okay, so let me see, guys. As you can see, showing me this value trading range. So the value trading range shows where the MSU is forming. Okay, so it's like just an indicator like that. All right, but in the grand scheme of things, you can see price has taken the low over here, price has taken the high, and this is your true breakout structure at this point. So it means that when price gives any retracement, you want to sell. But funny enough, that did not happen. Price didn't give a retracement because I was watching this trade. It just continued to drop and dropped into this area. Okay? So after the drop into this area, I was watching on M. Like I said, I don't use M5. I think today is the first time I had to check M5 because of what Dave posted on the chat on the group. I don't check M5 because M1 and M5 structure, they are basically alike, and I prefer to be on M1 than to be on M5. Okay, so as you can see at this point, sorry, I need to show you guys this. As you can see at this point, this is the low, the high, this is a true breaker structure, all right? And right now, this area is liquidity. Don't ask me why. Why? Now let's zoom in into what we have on M1. Okay. So internally on M1, you can see price has taken the low over here, taking the high. This is also a true breakout structure on M1 internally. So number one, this is going to be your liquidity. All of these guys, there's also an internal MSU in this guy. This takes the low, this takes the high and drops at this point. Okay, internally. So at the same time, remember what I said yesterday? This MSU is also liquidity, right? Like I said, on a structural leg, you can see as many structural liquidity as possible, because you can have your main loads can be in different places, right? The main loads can be in different places, right? Another interesting thing about this level, what's that level again? Show you. Let's go back to 15. The things are just clear and interesting. Yeah. So price reacted from this eating engulfing, and yeah, the classical scenario was perfect with that. I did not take this buy. I was not engaging. Okay. The most important thing for me was, oh, I've gotten a valid trading range here. There's an MSU waiting for me here. How do I engage this? That was like the most important thing for me at the time. So let's see. Price comes back. It was pretty jockey. Now, at this point, I can tell you that a lot of people wanted to start buying or was probably buying at this point. But what was the int for me? The int for me is again how to identify your engulfing. As you would see, this guy, this candle engulfed this candle. If you agree with me, and I get a yes, this candle engulfed this candle. You agree with me, and I get a yes. This is a bearish engulfing. These two candles are bearish engulfing. Yes, okay, thank you. Somebody like this. Yes, okay, thank you. All right. So what does that leave me? What does that tell me? So number one is, oh, okay, yes, yes, okay, thank you. Number one, I'm asking myself the same question. So where is price now, and where is it likely to go next? So price is in a supposed bullish momentum. Okay. But the most important thing after this bullish momentum is that number one, we just hit an H4 resistance, right? This is an H4 resistance level. Very, very important. So I have that in my mind. I'm thinking, okay, but is there anything on H1 that is telling me this should be a sell? Now, this all these things you can see on H1 is because we're on H1. Let's assume these two candles have not formed actually. Okay. So what is H1 telling me? H1 is telling me that, oh, one, we had just had a break of structure here, right? And here is liquidity. Why? Because this low is the last low before this main low. So yeah, liquidity. So I'm starting to think, okay, if this is an H4 level, well, maybe we can get a small retracement into this level and then continue higher, right? So I'm having that thought. So on M15, so I'm asking myself, is there anything on M15 that is suggesting that we should sell this trade? Okay, so sorry, waiting for my network. So it's just that logic. You're asking questions. You're not just cramming patterns, looking for a material everywhere you see. You're asking everything that happens that you see on the chart. What does it mean? What's price trying to tell you? There's nothing the market does that it does not leave a hint about. Okay. There's nothing it does that it doesn't leave a hint about. Okay. So on M15, I can obviously say this is an engulfing here. This is another engulfing. So that's double engulfing. I already also know that this is price behavior into this H4 level. And I already have my true break of structure at this point from M1. So I'm thinking, what do I need? I remember what I said about double engulfing. The moment you can follow all this BP, EFG, double EG, the moment you can follow these things, your use of trend line becomes easier. As you can see, there's a trend line marking here. So first thing I did was I entered a small position at this point. So I took a small risk. Okay, there's something in the charts. So let's make the class more interactive. Okay, so who should I unmute? If you want me to unmute you, just signify. Want me to unmute you, can you signify? Yeah, can you just raise your hand? I would actually unmute you. Anybody at all? Okay, nobody. All right, so we have double engulfing, we have another engulfing here. So the next thing is to ask yourself, well, if I'm going to take this trade, what's the risk you can take? So take the risk, a very low risk lot size, and then entered. Obviously, if price takes me out at this point, I'm done for the day, or I'm done for London session and just report to New York. New York is always more interesting. I actually prefer to trade New York session. Always interesting. And don't forget that from the look of things, I'm looking at this H1 level, this H1 liquidity as my possible target. So if I decide to see any sell, okay. So I was still not done, right? Because I was still looking. What else? What else? Then just keep waiting. Okay, now price formed again and gave this engulfing. Do you agree with me that this is an engulfing over here? So you have this is even like a triple engulfing. This is an engulfing cell. This is an engulfing cell. This is an engulfing cell. So tell me, please, if you knew had this information I had in the market, would you take this cell over here? Yes. Okay. Would you take that cell? Yes. You would have taken the cell. Put your stop maybe somewhere here or somewhere here. And then your target, just like I said, at the time I wasn't sure. So I would have been targeting this level, this H1 liquidity level. Okay. Somebody said something. Yes, okay, thank you. All right. So the moment you are patient, if you're in a rush, you are likely going to the market is going to you are going to be making rush money, scared money, fearful money. But when you are calm and then you allow the market talk to you, I don't know, it's not as though you are hearing voices or you are listening, but you're just asking questions. So okay, what's the market really saying? So you want to be super, super calm. You want to be able to process all this information. All right. The idea is not that you don't see these things on the chart. The idea is not that this thing is complex. No. It's just that you're not asking yourself the right question. You must ask, okay, what can I say? There are only the the all of these things that we started to mention from Saturday. We mentioned SNR, which most people knew about. We mentioned engulfings. Most people knew about engulfings. Then we mentioned MTF equilibrium. Most of you know about MTF equilibrium. We mentioned BP. Most of you know about BP. Okay. EFG, I don't know if many people know, but EFG has always been on my YouTube. Double engulfing is there also. And then price delivery, price behavior that I explained yesterday is also there. Now, systematically, you should be able to, these things are frameworks. They are like conferences that are staring at you on the chart. They're on the chart, but you just have to ask yourself, what are these things telling you? From H4, H1, M15, H4, H1, M. If it's not clear to you, just watch, just keep watching. You don't have to force a trade. But I don't think I can tell you for sure is you will always get a trade, no matter what. See, even if I'm just coming to the chart right now at this time of the day, I will still get a trade if I want to. You would always get a trade because you are reasoning, you are thinking, you're not looking at patterns just because they are there. You're looking at patterns and you're asking yourself, what do this thing mean to me right now? What is the market seeing because of this? Okay? So you're able to frame your knowledge based on this thing. All right. So obviously you would have taken the sell first target for me. Yeah, this one. Okay. So now I'll teach you guys something. So price dropped, obviously, dropped. Now I wish I could show you something. I wish I could show you something. The price got to this level, this H1 liquidity level. There was a reaction on M1, and I was watching at this level, right? There was a reaction on M1. And at the same time, remember that this is also, please pay attention to what I'm going to mention now. Please. This is also a level. This is a classical scenario level at this point. Most times, when price breaks with a heavy candle, right, on H1, H4, or something, when you go to a lower time frame, you can catch a reaction from this same level just because you've marked it. So when price reacted to this liquidity level, see, I'll show you on M1. It's something I use to gauge if a level will hold or not. Okay, so see on M1. Oh, yeah, too many levels. Sorry, let me delete some. So that's the problem of so many lines. Let me delete the figure of figure. Okay, so back to H1. Higher time frame, please. See, higher time frame. You will not get lost. You have more things to think about. Okay, so like I said, I'm not concerned about this candle. I just want to show you when this candle dropped to this level, what happened, and the reaction from this classical scenario level. Now let's see M1. And it's one of the things I use a lot. I use it a lot now. See M1. And I'm going to ask you another question. Now, this was the reaction. This was M1's reaction to that level. See, we tapped, as you know, it was the last low before the main low. What happened? There was a reaction. And where did price react to? Now, see, this guy taking still, please, I want you to see that this thing is not magic. Whatever I've mentioned, there are actually things that actually work. No, this guy, the eye over here breaks. So we say this is a strong eye, right? And we say this guy is the last eye before the strong eye. Okay. So in my mind of mine, I entered another trade here. I entered 0.1 lots because my stop loss was going to be very, very wide. So I entered another trade here. So again, it's always about the risk. Always about the risk. Now I was expecting that this eye would get taken, but it didn't happen. So immediately this engulfing cell formed, entered another entry at this point. Now, this is a classical setup. And why did I enter? Because of this H1 level. This is an H1 level. So you imagine how an H1 level from nowhere, even though price has not reacted to it now, but on the lower time frame, price has reacted to it. That can be a trick for you. Okay. So the moment price reacted from this H1 level, I already know there's a high chance that this guy is going to go. So I kept on holding my level. And also the 0.1 that I entered here was still good. Why? Because I could have entered two lots or something, but my risk, I don't want to take a risk that will make me start praying that if price retraces, what if price now starts to go high? I want to take trades that I can go play games, I can go do other things with my friends. Okay, so I already knew this was going to go. And that what does that tell us? That tells us price has taken the high. At this point, price would most likely come to take the low. And what does that show us? Again, on H1, I can see if you can see this gap level, this is also a very, very solid gap level. So I'm checking H4. What else is on the H4? So it's more about the reason. Okay, this is a broken gap at this point that coincides with this gap level also. Okay, we are thinking. Everybody is just still thinking. So you're saying, what would happen? What will it be? What can price do? Okay. So an entry thing, as you know, as everybody knows already. What else do we have on interesting? On interesting, you would see that this low, this low is the last structural low after this high. So if I'm to draw anything from here internally, you have this, this. So if this high has been taken, there's a chance that price can also go to this level. Okay, there's a chance that can. So we have a sell, and the sell continued. See, doubled. Oh yeah, and then there was an EFG entry at this point. This was also a very, very good trade. I expect many people to have taken this particular sell after, especially from here. Okay. Why? Because number one, this will be your target. This M15 low will be your first target if you're taking the sell from me. Why? Because of what I mentioned. This is the previous high. This is the low of that high. So if price has taken this high, there's a chance that price will come and take the low of that high. And then you have an EFG formula at this point. Okay, EFG, and this is just M15. So you have EFG, this is an engulfing that failed, and then this engulfing forming over at this point. So let me draw this engulfing. So this is just M15. So let's go to M1. H1, sorry. So on H1, there was a gap level. You see, H1 gap level. So again, so that's why I say you must ask questions. What are these time frames telling you? These time frames are what dictates what you decide to do. So let's see H4. Well, H4 is critically maybe not telling you much, except the fact that we've broken down and then this breakout zone is over here and looking at us, staring at us in the eye. So one of the most important things you see is to be able to pick this sell. So price came back to that level, very, very good sell for you. And then where will be your first target? Like I said, this zone will be your first target. So this low, you are taking decent tips. Now, if you were not sure what was going on here, what time frame will you go to be sure? Like I mentioned yesterday, price delivery, price behavior, they would almost always appear on the chart. Now, I've not checked this chart before this particular because I was not in this cell. So now let's just look at it together. Now, what do we have here? Within that zone where that we want to sell from, this is the M15 area, right? The zone that we want to sell from. What do you see? You can see an obvious MSU, but 60 low, 60 high, true breaker structure, right? What does that tell us? That tells us this I is liquidity, right? Because it's the last I for this main I. Okay. And as you can see, it left a chunk of gap. This is an hidden engulfing right there. You wouldn't have known that price is going to come to this hidden engulfing. For me personally, if I was going to take the trade from M1, I would have entered at this point that liquidity was taken, but my stop would be above this high, and I would still be safe as long as I make money and as long as my risk is good. So usually that for me is usually priority. So as you can see at this point, price takes the low, yeah, please follow through. and then take the I over here, and then give true break of structure. So on this retracement, please guys, would you sell this trade? You have H1 reason, you have M15 reason, you have H4 reason, you have M1 reason. Will you sell here? I can a bit lost. Oh, speak, speak louder. Oh, so I'm saying we already saw H1 gap, right? Price is writing for H1 gap for bearish continuation. So let me show you guys again, just the logic of things and how they happen, right? So see H1. Where is that? Okay, this thing has played on, and I don't want to force it. Trying to see if I can land up quick. So this was the H1 gap. This is the level, right? Let me delete everything. So this is clear. At least this is the last step. This was H1 gap. So we have H1 gap. On N15, we have EFG, extended type, right? So this engulfing buy has failed, and then this new engulfing formed, right? Never forget week to week. Now within this new engulfing, I was saying that, oh, if you were not even sure, for example, for me, you could have entered the trade directly on N15 and you put your stop above this previous this EFG. But for me, if we decide to go to M1, just like I mentioned yesterday, what will you be looking for? You will look for price behavior and price delivery. Now, within that M15 area, you can obviously see that there's an MSU. So it takes the low at this point, takes the high, breaks. This is your true break of structure. It means that whatever retracement you have here is going to generate the price to sell. And that means this high is your last high before this main high. So this area or this level becomes a valid zone for you to want to trade from. So for me, like I said, if I was going to take this trade, I could sell, yeah, as long as my stop is on this MSU, because that is my area in validation. The moment this guy gets broken, that means I have a true break of structure to the high side. Okay? So I'm still watching. More reasons why I want to wait. Maybe I'm just a patient dude. I didn't take this sell directly from me. So I still wait for my price behavior or my price behavior. And what happens if I take the low over here, take the high over here, and give a true break of structure just right here. And after that, give a retracement. On this point, I'm not going to hesitate to pick the sell. I'm going to pick the sell probably from here, put my stop below the previous MSUI, and then my target. My target, like I said, my first target is going to be that M15 low, this M15 liquidity level, this one. So this will be my first target. Obviously, you remember that we marked this H1 liquidity, H1 gap level rather, as the possible place that price reacts from. And within that H1 gap level, you can see there's an imbalance there. Okay? So this is my first very good trade. Maybe let's say I come to the day, I come to the chart and I take this trade. See, I tell you, a 2% trade in a day is a very good trade. If you take this in a day, you're good. You're okay. Okay, you're doing well. You've done very, very well. Most people don't make 2% per day. Most people even lose 4 5% a day. Okay? So you are able to see that the framework for all these trades do not differ from what is in the SOP. Sorry, I didn't get the SOP. Do not differ. They are just the same thing, same thought process. But the thing that can change your trading is you asking the right question. You come to the chart, you are asking the market, what are you telling me? What is it you are telling me? Like I said, the market is never going to do anything without giving an hint. He always gives an hint. Okay? Always. Almost always. Okay. So if you are missing out something, and sometimes if you notice that, oh, price gives an MSU and then it didn't work, then the MSU is an internal MSU. Is this structurally correct? And that's where the structure comes in. So I've been able to do everything I can. I think I've shared my knowledge. In fact, the trades I took today, I've shared everything about my thought process about it. Okay. And this is because I want to see more people free and just in the spirit of Christmas, and also because I'm bored. Because I'm bored and I don't have anything else to do. Okay, so just in the spirit of the festive period, then I feel that if you are able to build on this, maybe from the videos or maybe from some of the previous YouTube videos or anything, you can get decent knowledge about what to do. Now, the other thing is, I'm not sure if I should dissolve the page today or if I should leave it on because I don't know. I might not be as active. I might only just come in, okay, maybe I got tagged with a question and try to answer if the question is a good question. And so I'm not sure. Maybe if you guys want me to close the page, let me know. I should leave it. Okay. Just one person saying I should leave it up. Maybe. But I'll have to make somebody the admin, somebody from here who was present. I don't know. I know who to make the admin. Okay, I'll have to make someone the admin because I might not be as active. Right. So the aim is uh, the only way to then learn now means that, for example, if you've not gotten any of the setups, the BPE, the if you don't know how to identify it, the only challenge you have is how to identify. Asking the right question is simple. Just ask the right question. These things, they are not much. So what you can do, right, is make a list. So you can create a Notion page where you say, oh, number one, BPE, number two, EFG, the two types of EFG, number three, the breakout structure, and let's say four, double EG, and then five, the price delivery and price behavior. Yeah, I think these are pretty much it. If you make a Notion page where you make you make a screenshot of 20 pictures each of any of this, 20 pictures for this, 20 pictures for this. What would that do? Number one, that's going to help you train your eyes. And as you see something, you're able to build your reasoning more of why something is happening. Because as you make these screenshots, you will see the ones that fail and be able to answer the question, oh, why did this fail? Why is this VP not working? Okay. That would mean that, oh, you probably have to check an additional time frame to confirm what you're going to do. So, quite remember, okay, so the like I said, if you can identify, asking the right question is the easiest. Okay, that's the easiest thing to do. All right. So again, another thing is to if you can get, for example, if you do this actually, you train your eyes more, you'll be able to see these things. Then you answer the right questions. And also, let me just add six liquidity, structural liquidity, because I know that's a gem that a lot of people kind of talk about structural liquidity. So if you can maybe 20 screenshots before this, I'm not saying it to you just for your own hard work. If you really want to put in the work and if you because if you put in the work, you're going to see results. Okay, I have quite a number of who have tremendous results, and it's maybe because I don't share as much. I'm a very conservative person. I just try to put out what I can put out, and maybe in the nearest future, I can have something else like this. Or if you if you do this, okay, let me just throw this out. If you are able to do this, maybe create a page or anywhere and make 20 screenshots of each of this. I might consider taking you more thoroughly, and then we'll do backtesting sessions together when I'm free. If you're able to do this, if anybody does it, in fact, we can make it every weekend. I'm pretty much free from now till January ending if I start work. Okay, so because I just finished from med school, so I'm just waiting for my internship. I'm pretty much free. So if you're able to do this, I can still jump on a call. Just let me know. Just send me a text out and tell me, oh, you've done it. Send me the link to check. And then I'll jump on the call. You can do your FX replay. You have FX replay. If you have Trading View on Premium, and just any blind back testing, or you can even jump in a live session together during New York if I'm free. Right. So that's all I'm going to be saying for now. So just the fact that the the teacher's thing is number one, stay far away from lower time frames. The closer you are to them, you might not be able to think too clearly. But when you're on high time frame, see, when you just have to check M15, H1, H4, you would think more clearly, right? You would think more clearly. M15, H1, H4, M15, H1, H4. You think more clearly. But when you start to go M5, you must probably have, before you start going lower, ensure that you have the discipline to always check the higher time frame. If you're someone that checks M15 and M1, sorry, M5 and M1, and you don't check M15, H1, H4 frequently, you're shooting yourself in the leg. It means you don't have the discipline, and you must be honest with yourself. Be honest. I had to. It's a battle I fought with myself for a long time now. Do I have to leave M1? Do I have to leave M5? I was telling myself, oh, a lot of traders trade M1, a lot of traders trade M5. Well, you're not like them. You must be honest with yourself. What's that thing that is stopping you from reaching your goal in trading? And then address it. Is whatever it is. Could be lower time frame chart. It could be your risk management. It could be your overthinking. It could be because you're looking for money in a hurry, and then you are very very emotional about the little capital you put in. It could be anything, whatever it is. Sit down, think about it, identify it, and then just the same way you're looking for a strategy to know the market, look for a strategy to cope with those things too, or else your bank account will keep going down. You just be like another gambler that keep losing all of their money. So you have to ask yourself, oh, okay, I know I'm a very emotional person. Maybe after a loss, I know I'm very, very emotional. I know I really am trading. So after a loss, I'm not going to trade at all. And you look for an accountability partner that, oh, okay, that is going to put you accountable to the things that you do. It's 2025. 2025 is in a week time. You want to really change your life. You don't want to come back this time next year and you're still struggling. This time next year, you should be helping other people too, right? You should probably be having some free time on your hands and just helping people, helping them get better. And that will not happen if you've not helped yourself yet. So you want to be honest with yourself. Just do a honest checkup on yourself. Are you putting in the necessary work in terms of the strategy, in terms of risk management, in terms of the honesty that you deserve? You deserve to be honest with yourself. So um this is going to be the end and the a wrap to everything that I've been teaching. And please, if you have any question, ensure it's a good question, no, please, because and if you want to send me a text, don't just say I, just go straight to the point so I can reply you faster. All right, I'm going to stop recording now, and if you have any questions, please just signify and let me know.